Hopefully you guys took from our last example that EV remains the same despite a change in the company's capital structure, but I want to hit this home a little bit more. So in the previous example, what we looked at was the issuance of more debt. We took on more debt, but also raised cash in turn. Now I want to look at an example where we actually pay down debt and see if this in any way were to impact enterprise value as well, since this is also a financial activity. So in this example, as we know, Max's Bikes is probably going to be a capital-intensive business since they hold a substantial inventory of well-maintained bikes. And when Max started his business way back in the day, he originally had funded his purchase of all these bikes with $50 million of debt, and this was provided by a loan shark. So these are very onerous terms that he doesn't want to continue paying out on. So Max no longer wants to do this. He wants to pay off his creditors, and in order to do so, he issues $50 million of new equity, of which these proceeds will be used to pay off the debt from this loan shark. So the question here is, in the previous example, we saw that as we increase debt, there was no impact on EV. Now, as we decrease debt, there's a question of, okay, would that decrease enterprise value? Since we're paying down debt, would in some way, since we know enterprise value is sort of the sum of equity and debt and other stakeholders, if we have less debt, then does that mean enterprise value would go down? Well, let's see if that's the case. As we can see here, there is also no change to enterprise value. And the reason for that is, while we did pay down debt, so debt went from $50 million to zero, we did that by taking on more equity. So there was a counterbalancing effect. Again, these basically canceled each other out in that while debt went down, equity went up by $50 million. So this is another example of how financial changes and financial adjustments, financial engineering, theoretically should have no impact on enterprise value. Therefore, to summarize, what these two examples have demonstrated to us is that transactions that only impact a company's funding sources as opposed to core business activities do not affect enterprise value in any way.